Traders Corner is proudly brought to you by IG, the specialists in CFD trading.
Welcome to Traders Corner. As always, I'm joined by Garth McKenzie, founder and editor of Traders Corner. Garth, welcome.
Hi, Julieta.
Garth, we've been a little bit range-bound in the last couple of days. Yesterday in particular, we had President's Day holiday in the United States, so very little happened on our own market. But do you think that's starting to change? And I know that you want to bring up a chart of the S&P 500 to illustrate why that may be the case.
Yeah, so let's have a look at that S&P 500, because I know I alluded to this last week on the show, and I just want to show an update to this. Because I said to you last week that we're looking at the S&P 500 being very range-bound, and that essentially it was stuck between this range low at 90 and the range high at 2065, and that we would need a break beyond one of those two boundaries to then give us the next leg of direction. And we have now seen a break to the top side of that range. So that opens up a projected target of 2,140 for the S&P 500, and that's a short-term target. And you get that by taking the height of that trading range that we'd identified through January, and you project that distance up from where the breakout took place. So it does imply that there could be a little bit more upside in the short term for the S&P 500. Certainly right now it's knocking on all-time high territory again, and it does seem like the momentum is on its side. So for the time being, yes, it's looking bullish, and it looks like there's potentially a bit more upside here still.
So for a bullish stock market in general, is this then the thinking behind a share that presumably would be the ultimate play on a bullish market, and that's Coronation? Yes,
that's right. It certainly is part of the thinking behind that. Coronation, obviously being a big asset manager in the country, it is leveraged to the performance of the stock market, not just locally but also globally. The greater their assets under management, the greater their management fees, and the better for their business. So yes, there should be a fairly close correlation between the performance of stock markets and the performance of a share like Coronation. And you can see that long-term chart that I've shown here now, that goes back to 2009. I mean, this has just been an unbelievable story. The share price is up 20 times from the lows
amazing.
of 2009. I mean, it was less than R5 a share in 2009, and now we're sitting up just north of R100 a share now. So it's been an incredible performance. So yes, the trade that we're doing this week is in Coronation, and it is a little bit around the thinking that if stock markets are strong, a share like this should be strong, and it has kind of lagged a bit recently. I also look at the performances of things like Sanlam and Old Mutual, and whilst those are life assurers, they're slightly different businesses. Nonetheless, those are also businesses that are leveraged to the performance of stock markets to a large extent. And if you look at the way Sanlam and Old Mutual have shot the lights out recently, you would think that Coronation possibly does have the potential to play a bit of catch-up there.
Well, so do you want to start off with the chart of Coronation and then also Sanlam and Old Mutual, and just do a bit of a comparison?
Yes, well, I haven't got charts of Sanlam and Old Mutual, but let's have a look at Coronation. And we start with this chart, which is a long-term chart, goes back to the beginning of this bull market in 2009. And what you can see quite clearly there is that the long-term uptrend that has joined all the lows of this bull market rally in the stock comes in at around about R100 per share. And we've seen the share price pulling back to just above 100 over the last few days. It does appear as if there's been some buying activity in that area. You've also got a 200-day moving average, which is at the same level, and I'll show that on the next chart. And the bottom line is that my thinking here is that this share price has consolidated over the last month or two, and it's pulled back to that long-term uptrend support. It's very oversold now, and there probably is potential for a break to the upside here. If we zoom in a bit, I want to just focus on that area where I've put a little box around the trading action over there. That's now the last 6 months or so. So let's zoom in on that area. And what you can see here is that this chart has been consolidating into what we call a falling wedge over the last, it goes back about 2 months or so. That we've seen this consolidation, and that's a very healthy consolidation. You can see the share price gradually gives back some ground. It's in a very healthy, controlled fashion, and what that has actually allowed to do is for the stochastic to become very, very oversold. Now, typically these wedge patterns are continuation patterns, implying that if it comes into the pattern from the bottom, like it has there in a rising trend, it then consolidates. Invariably, the high probability is that it's going to break out to the top side, and it'll continue with that trend. That's certainly what happens, and statistically it happens around about 2 out of 3 times. So it's a fairly good odds. So if we have a look here, notice that the share price has reversed up off of the 200-day moving average recently. That's that line over there. And also remember, on the prior long-term chart, I illustrated that the long-term uptrend comes in at 100 Rand, and that's at the same sort of areas where that 200-day moving average comes in. So there's a fair amount of support in that area. We have seen the share price reverse up off of that level, and it's starting to look as if the buyers are coming in. We need it ideally to break out through the top of that wedge structure more convincingly, and that'll happen if we see a fairly sustained move above 105 Rand.
And presumably, if there has been such strength in Old Mutual and Sanlam, there might be a bit of switching out of those into a Coronation. I don't know.
Yeah, I guess you could make a case for that. I mean, certainly when I looked at the relative strength of the stocks and compared Coronation to Old Mutual and Coronation to Sanlam, you can see that there's been a marked underperformance by Coronation. So one would expect that that mismatch would certainly have the potential to rectify itself. Anyway, I mean, that's the technical layout as I see it, and then obviously we've spoken a little bit around the fundamentals of the linkage to performance of stock markets and so on. I think that if we see a breakout through 105 Rand per share here, then it opens the potential for this share to go back to the recent high, which was 115 Rand. That would certainly be our first target here. So I've actually done the trade this week for the portfolio. I've gone in preempting a breakout here, and based on the fact that we have seen a reversal up off of the 200-day moving average, and on basis that this stochastic is extremely oversold now. And the reason I've done that is because it allows me to get a much better risk to reward ratio. If I buy it cheaper at that level, as it were, I can then put my stop loss closer and I can get a better risk to reward ratio. So I've gone and I've actually bought at 101 Rand 90. The stop loss I'm using is 97 Rand 50, and the target here is 115 Rand. That obviously is assuming that that wedge pattern validates and we see a break to the top side.
Garth, before we get into the mechanics of the trade, is Coronation, does it tend to move quite quickly? So if it were to break out, would it be quite a quick break to the upside? And which is why you would want to get in before, because, and we'll talk about Woolies in a little bit, because if you get in too late, then, as you say, the risk-reward ratio isn't great and maybe not worth your while. Yeah,
that's it. I must say I do like to get on the bus, as it were, in anticipation of a move, rather than trying to chase it once the break has happened. You do get a better risk-to-reward ratio if you do that and if you sort of preempt the breaks, as it were. Obviously, that does come with added risk. The safer approach would be to wait for the breakout and then follow the trade. But then, of course, sometimes your risk-to-reward ratio is not as appealing as what it is in a case like trading it like I've done here now.
Yeah, okay, well, take us through the details.
All right, so I've gone long at 101 Rand 90. The stop loss that I'm setting here is 97 Rand 50. The risk per share, therefore, is 4 Rand 40 cents. I'm risking 2% of our account. Now, we've had 277,000 Rand in our account at the time that I did this trade. So 2% of that is 5,540 Rand. If I take that risk, the capital risk, the 5,540 Rand, and I divide it by the risk per share of 4 Rand 40, then it gives me 1,259 shares that I could theoretically trade. So I've rounded that down slightly to 1,250 CFDs, and that's what I've traded for the portfolio this week. The target here is 115 Rand, and the risk to reward ratio on this trade, therefore, is 1 to 3. Which you'll remember is what I generally try and look for on all my trades. So I'm happy. If we can get 1 to 3, that's perfect.
Yeah. Okay, Garth, so that's the trade for the week. There were a couple of shares that you alluded to last week, or shares that you would want to have a look at. And I know there's another share that you would like to point to this week, being Shoprite. But Woolies and Mr. Price were the shares that you mentioned last week, and they actually had a very good performance after an initial dip. Did you get into any of either of those at the time?
I actually didn't, not for this portfolio, unfortunately. The Woolies and Mr. Price, what I'd said was that they would look to pull back slightly and then you'd potentially buy off support for a rally. And both of those recommendations worked out very well. Certainly the Woolworths trade has been phenomenally successful. And Mr. Price to a lesser extent, but it's also been quite successful. So those were two shares that I said to watch for the week ahead last week, and if you did manage to act on that, you would have done quite well. And I'm going to do a similar thing this week with Shoprite. And I think I'll try and do this each week for the show. Try and put something on the radar for people to watch in the week ahead, something that's actionable and potentially a trade to watch in the week ahead. So we're not always looking back retrospectively. We're also looking forward at what possible opportunities might line up in the week to come.
Okay, so what piques your interest about Shoprite?
Right, so first of all, this is a longer term chart. This goes back about 3 years now. And what's very interesting to note is that the stock was trading in this downward sloping growing channel over the last 2 years or so. And it's recently made a powerful breakout to the top of that channel. Now that is the dominant feature of this chart. From a long-term perspective, that's a very bullish breakout, and you would back the likelihood that this share probably has further upside to come. The next question is, of course, then, okay, when do you buy it? How do you look for the short-term opportunity to get involved? And I want to zoom in on the more recent trading action in Shoprite now. This is the last 6 months worth of trading action, and just show you what I'm seeing here. So there we go. There's an uptrend that comes in from the October lows recently, and you can see that that joins the low point in December there. Now again, the share price is consolidating. It's making another one of these falling wedge structures, which is a bullish continuation pattern within a rising trend. And there's quite strong support evident at 173.50 Rand over there. So my sense is that we'd look for any pullback to 173.50 and any reversal from that area to buy this. And if you see a break to the top side of that little wedge structure that I've identified there, then that gives us the confirmation that it's a buy signal, and we'd look for a move back up to the recent high, at least to 193 Rand or thereabouts, but quite probably a lot higher than that over the medium term.
Because another thing about Shoprite, and it's a bit like Coronation, it's underperformed some of the other retailers. I mean, if you look at it, and interestingly, it's been the fashion retailers that have had a very good year, almost sort of contrary to conventional thinking. And Stephen and I were discussing Fashini up 27% this year. So is that also maybe another factor in looking at a stock that's underperformed its peers and retailers? Yeah,
I think so. I mean, look, Shoprite obviously is a very different business to the fashion retailers. And I suspect part of their underperformance might be their exposure to the Naira in Nigeria. That's also been a bit of a thorn in the side of a few companies that are operating in that region. But nonetheless, you know, if I look at this setup, I think there's a fairly high probability that we could see a break to the upside here through the top of that wedge structure. So definitely for the week ahead, it looks like an interesting one to keep on your watch list as a potential buying opportunity.
Guys, before we get to what the portfolio looks like at the moment, do you regret not having gotten into Woolies? You know, what happened that having sort of pointed out these two possible trades, what happened that you didn't actually enter either of them?
Yeah, so what happened with Woolies is, I remember I said I'd look for any pullback into the area around about 81 Rand or thereabouts to buy. And it did actually get into that area. I was waiting for a daily reversal, and then all of a sudden the results came out last week. I think it was on Thursday last week, and they were very, very good results. And the share price gapped up on that morning, and it just broke out. And, you know, like I said previously, I'm not always that keen to chase a break. Yeah. Look, in retrospect, it would have worked on Woolworths. Had you chased that break, you would have done very, very well. But I kind of looked at it and thought, okay, well, now my risk to reward ratio is not going to be so great if I run after this share and chase it. So let's just consider that a missed opportunity and look elsewhere. Yeah, so you asked me, do I regret that? Of course I regret it. You know, the share price has rallied more than 10% since then. So absolutely, it would have been great to be involved there.
Okay, well, let's hope Shoprite proves interesting in the week ahead. So, guys, what does the portfolio look like then, having entered into a new trade this week?
Okay, so we're sitting with just over 280,000 Rand in our portfolio. So that's up 12.3% for the year to date. So yeah, halfway through February, I think that's a pretty decent performance for the year to date so far. You can see all of the trades that we've done this year so far: Rand, Dollar, Sanlam. We've got a put spread option structure still working in the background for us in the event that the market should pull back. And then this week's trade in Coronation, we long 1,250 CFDs. And that's at the moment making a nice mark-to-market profit for us of just over 3,200 Rand. So all in all, looking good so far, and happy with where this portfolio is.
And guys, to end off with, next course dates that you've got on the go?
Yeah, so I'm in Joburg this week, but the course is fully booked. So the only ones that I've got seating available for now are in Cape Town and Durban. So Cape Town, I'm down there on the weekend of the 27th and 28th of February. In Durban, I'm there on the weekend of the 6th and 7th of March. So anybody that's interested in attending any of these courses in those regions, please email me, garth@traderscorner.co.za, and I'll send you the details.
Okay, great. Garth, we'll leave it there. And we'll wait with interest what happens to Shoprite. Also coming out with results next week, Tuesday. So maybe there'll be a bit of movement there, and also Coronation. Garth, thanks as always for joining us. Garth McKenzie is founder and editor of Traders Corner.
Traders Corner is proudly brought to you by IG, the specialists in CFD trading.